What is going on, guys? Welcome back to another video. Mo here. In today's video we are going to be discussing institutional candles. Today I'm going to show you guys how to spot institutional candles. What are institutional candles in under 10 minutes? So let's get started ASAP. Now before I get started, I just want to thank everyone for being part of the community, for watching my videos every single week when I upload. FU Academy has now officially been running for 2 years, so it's our 2-year anniversary last month, and I actually completely forgot about it and completely forgot to announce it. So once again, I just appreciate every single one of you guys. As you guys know, if you're in the Discord, I have announced that we're going to be completely changing the company for the next year. The whole system is going to be changing for the absolute better. It's going to be a proper premium service from now on, and it's going to be very hard access to get into, because I believe that the value and the knowledge that we are giving, especially the stuff that we're teaching, it's not available out there, especially with the order flow stuff that we're doing with the smart money concepts and all of this. So as I said, it's going to be a whole premium service that we are going to be providing to people, and it'll be a whole onboarding process, etc. There'll be a whole new system in regards to the app, the website, the features, the training program in general. So yeah, guys, it's going to be absolutely crazy. So there's literally only like 2 more weeks left in this month. So what we're doing is we're providing a discount code just for the monthly package, where you'll be able to get €25 off of the monthly package. This is the last time we'll be providing any discount codes. It's just to celebrate the 2 years that we've been running, helping people, teaching people in the Forex markets. So this will be the last discount code for the year. After that, everything's changing. Pricing will be changing, etc. Signals will be separate. Training programs will be separate. Everything will be changing. So as I said, this is the last chance you can get access to every single thing, okay, at a crazy discounted price. Okay, we literally did this discount. We're doing it like we don't even care about literally how much it is. We just kind of want to give people one last chance for the end of the year to hop in, see what we're about. And this price will be locked in forever. Once prices change, everyone that has joined before the new year will be honored with the old prices. So yeah, enough of that, guys, though. Let's get into institutional candles. So what are institutional candles? Institutional candles are basically institutionally sponsored candles. It's a refined area of basically what we look at is an area of supply and demand, and we try to refine it to an institutional candle. So an institutional candle is the last down candle before a big up move, or the last up candle before a big down move. Okay, and it's the candle where the institutions bought to sell, okay, or sold to buy. Okay, and a lot of time you'll see the institutional candle coupled with either an FU candle next to it, or the institutional candle is an FU candle. So let's kind of break everything that I said there. So institutional candles, a lot of them appear. Okay, you'll find plenty institutional candles, but just because something looks like an institutional candle doesn't necessarily mean it is. So obviously there's a lot of confirmations that you look for before you look to execute institutional candle. Okay, so a big thing that you usually look for is you need to see a sort of break of structure before you pick out your institutional candle. Okay, so a lot of time what you usually see is a consolidation occur. You'll see a breakout structure. This is the fake out. It clears liquidity to the upside, and then you see a move down, and once it breaks structure to the downside, that's the institutional candle being validated. So usually what I look for then is a retracement back up to the institutional candle. Okay, and I usually will look for a retracement to the open or the 50%. Okay, and we pick this area because this is usually where the most volume, okay, usually where the most volume has occurred. And an even more detailed way of looking at exactly where you should be entering off the institutional candle is using order flow. Okay, so we'll discuss this some other time, but using the order flow footprints is absolutely crazy. Okay, so if you know, you know. So we get in right here, and then boom, we look to sell off. As I said, there's multiple confirmations that you can add to this setup, but this is the basic entry that we are usually looking for. With the institutional candles, it's beautiful because we're able to then go down, break down onto lower time frame, and we can find institutional candles within institutional candles, okay, just by breaking down structure on the lower time frames and getting in on the mitigation. Okay, so mitigation is basically institutional candle being retested. Okay, banks would be closing out their orders, because if you think about it, right, this is what they're doing. They need to sell to buy. They can't just place their orders in one go. Okay, it's not possible for prices to be filling because their lots are massive. So what they do is they force people to sell back to position. This is why they're going for liquidity. Liquidity basically is they go target a certain area of liquidity, such as equal highs, whatever it is. They force people to sell their position back to the market in order for them to be able to then get their prices filled at good, to get their orders filled in at good prices. Because if they simply just bought or sold, most of the time they're not going to be able to get filled in at their desired prices. Price will just try find the closest area in order for them to get filled in, and a lot of the time it will be very, very far away from the desired prices. So this is why they're going for the liquidity. So that's what we're looking for when we're looking for institutional candles. A lot of time an institutional candle is a very, very sharp move. Okay, something that sticks out. Okay, so in this example you have sort of consolidation that we have right here. Okay, so we have a mini consolidation, highs being created, and then a big move up, as you can see. Okay, so we have this big move up, clears this high, and then we get a push down. And an institutional candle is usually very, very high probable, okay, around the open of sessions. Okay, so a lot of the time, usually what I like to use is the this one right here. So a lot of time around the open of a session, or around the London NY overlap, institutional candles are usually more high probable. This is what I like to do. So as you can see right here, what we have right here in this example, we have the Asian range, fake London rally just before London open, price takes down. So now what we look for is a retest after we've seen the break of structure occur, which it has. Okay, break of structure occurred right here. We wait for the retest and we execute from the open. Price taps into the open, kind of a small distribution right here, and price sells off beautifully. Okay, and you get this multiple times. You could have rode this trend multiple times. Okay, so you would have had another institutional candle right here. Okay, price taps into the institutional candle, sell off. Okay, but you always need to get a break of structure. So see the way that we broke structure right here, then I can execute. If we don't get a break of structure, I'm usually not looking to execute and get into a buy. Okay, so let's take a look at a few more examples. Here's another really nice example. So we have, obviously, we understand that our trend is bearish. And basically what we're looking for is, before every drop, we look for the institutional candle right at the top of the pullback. Once we see a break of structure, we wait for price to retest up into institutional candle, and we look to sell. And this is what we constantly keep doing. Retest into institutional candle, we look to sell. Okay, so this is what we have right here. We made a new low, we pulled back, and then boom, we made another low. So now, because we broke structure to the downside, I look for a retest up to the institutional candle, which is the last up candle before the down move, clearing liquidity. Okay, so this is the FU and institutional candle, 2 in 1. So now I look to execute from the open. And these type of trades allow you to get in very, very accurate setups most of the time. And it allows you as well to have a very, very defined stop loss, so you know when you're going to be exiting. Because, for example, if you're trading like support resistance or stuff like that, it's very, very difficult to know where to place your stop loss sometimes, or where to exactly enter. So it can get confusing, and many people trading the same concept will have many different entries. But with institutional candles, it's clear cut. It's very, very simple. Everyone knows where they're going to be entering from. Once again, same thing right here. The break of structure after the down move. See, last up candle before the big down move. You wait for the retest up, touches the institutional candle, fills in imbalances below it. So usually that's what you usually see. Okay, you usually see consolidation, institutional candle created, move down, imbalances. So price needs to come back up, fill in IPA, touch, mitigate the institutional candle, and then make a new low to break structure to the downside and continue to downward structure, which is what we had right here. Okay, and this you could have constantly kept doing it. Okay, you look for institutional candles. For example, most recently, not much nice institutional candles that we have right here. Okay, structure's just been kind of ranging, so you wait. You always need to follow structure when it comes to institutional candles. Okay, so one last example. Let's take a look at like one last example right here. Beautiful example that we had on gold. So what you had lows being created, break of structure to the upside, but overall on the higher time frame we were still bearish, and this was just a simple pullback. Okay, and another move down. So now what I look for is the last up candle for the down move. I look for the supply. Here it is, and I refine it to my institutional candle. So I just take a look at the body and I drag it out, and we wait for the retest. Okay, I can include the wick, open, and the close of the candle right here, and I wait for the retest. Price retest this institutional candle, taps in, clearing these highs. Okay, and then away it goes. Price break structure to the downside. Beautiful, beautiful IC. This mitigation candle created another institutional candle for us, so I could have gone in and another setup right here. Okay, price break structure. You retest the institutional candle, and I look to execute, and you keep going down. And the beautiful thing about this is you can break down to lower time frames. If you missed the mitigation of this candle, for example, you usually be able to find another mitigation, but this is going to be discussed on another video. So that's it for this video. Try to keep it under 10 minutes. We're literally just 30 seconds over, so don't mind me. But yeah, I appreciate every single one of you guys for hopping on. Don't forget, guys, the discount code, use it, because honestly, this next new year is going to be absolutely crazy. We're going to be creating many six-figure traders. So yeah, I'm absolutely excited for this. So once again, I appreciate every single one of you guys for watching this video, and I'll catch you on the next one. Have a great day.